Today, following yesterday's interest rate cut, as we mentioned previously, the possibility of a decline remains, and we might see support levels around 86 and perhaps 84. Generally, we've discussed the potential for a drop on several occasions, whether triggered by the interest rate decision or even without any news. Momentum can sometimes be surprising. Bitcoin might simply settle at the current level and begin to rise. With the new week just 3 days away, you might see a rally towards the end of the week, as seen on the weekly candle. Anything is possible, but we always base our analysis on normal market movements to avoid any surprises. After sharp declines, the price needs time to consolidate before rebounding from this low. This is evident on the daily time frame, while on the weekly time frame, the entire decline appears as a single event. We've discussed the possibility of seeing prices return to the 93,000 level by the end of December, after falling to 86. The candle might close near 92. More broadly, we anticipate that January will mark the beginning of a genuine recovery. A recovery here would mean the price breaking out of the current rectangle, which is the bottom area between $83 and $93, roughly equivalent to the $10,000 level in terms of sentiment value, and is the primary consolidation zone. A major bottom is forming, and the price is moving sideways within it before starting to rise. This behavior has occurred before. There was a clear bottom where the price consolidated for a long period before breaking out. Similarly, the price might break slightly below the support level and drop to 80,000. Then return to the rectangle before resuming its upward movement. A slight break below the support is quite normal, as happened previously when the price dipped below the support level with a candlestick shadow and then rebounded strongly. Could this happen again? Yes, it's very likely, and there's no problem with that. Many cryptocurrencies won't experience significant fluctuations. They might drop 10% compared to Bitcoin's 5%. For example, a cryptocurrency like NEO might drop to the $3.70 level, which is a support level. We've said that the best time to buy is after a dip. Those with available cash should wait this week without buying, as Bitcoin will likely continue its usual 5 to 6% decline following interest rate cuts, this being the third time this has happened. Currencies move differently depending on their position relative to support levels. A cryptocurrency like Zero, which is positioned above strong support, won't break through easily. However, cryptocurrencies moving at or below support levels have their own dynamics. It's best to wait until the end of the week. By then, Bitcoin will have completed its usual decline, and a more accurate assessment of cryptocurrencies will be possible. We also previously explained that December is not a month of significant upward movement. A rise above 100,000 will most likely occur in January. December is primarily a recovery month. We might see an attempt to climb towards 97,000 in the last week of the month. But the major surge will be in January. The accumulation phase is the longest stage, while the upward movement itself comes very quickly. A single weekly candle could suddenly propel the price above 100,000. The key is to complete the bottoming phase. We previously saw 6 weekly candles of recovery, followed by a single candle that turned the tables and pushed the price above resistance. The market requires patience and avoiding haste. A rapid rebound is usually dangerous and often leads to a sharp drop. Wave B, C. Sideways movement is preferable as it allows for the formation of a solid bottom. Fell further because it moved sideways for a long time before the decline, while other coins rose slightly before the drop and found stronger support. The same scenario occurred with LUNC previously. It completed a deeper decline before bursting upwards. Therefore, don't be fooled by appearances. A drop isn't the end. All coins are currently around bottoming zones, and this can all be recouped with just one weekly candle. The problem isn't the market itself. The problem lies with those who enter a coin and allocate 30% or 40% of their portfolio to it. This is the real danger. Diversifying your capital across at least 20 cryptocurrencies and not allocating more than 5% to any single currency is what protects you from shocks. We will be providing continuous updates in the coming days, God willing. Capital management is your first line of defense. Only spot trading, no futures, and no unnecessary risk. Don't add more than 5% to any currency pair, and let the market move freely. If you stick to the plan, you'll never experience a life-altering loss.